Many chart patterns are developing at the moment in the Forex market. Therefore, support and resistance levels very important in fact on these four currency pairs. Be aware though that this video is shown to a global audience, yet may not be suitable for everyone. Please take a look at admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Also, please be aware that trading for exchange and global financial markets is considered high risk and may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. This video is for educational and informational purposes only. And by continuing watching this video, you agree with this disclaimer and you are aware of the risk involved when trading. Let's kick off with the dollar yen. Looking at the daily chart, we see basically price has arrived at a key resistance trend line. This is from the daily chart, so it's a very long-term implication. If we get a breakout above this daily resistance, this could be a massive trend change again to the upside. If price bounces, then I expect a challenge of support down at 102.50 basically and 101.50. So those are basically the two scenarios I'm waiting for to get an answer on. That could be this week. The triangle on the 4-hour chart is pretty small, so price could still bounce back and forth here for maybe a day or two, but eventually I do expect a breakout. So the break, basically the bullish or the bearish break, would give me these two trades. The bullish break, I would like to see a daily candle. I would like to see a daily candle basically push above this trend line like this with a decent size. Once that happens, a bit of retracement the day after would be good, and I would expect a continuation up to the target, minus 272 target 109.50, perhaps even an extension up to the minus 61 point target at 112. Now, if we don't get the bullish break, then this could also be basically a head and shoulders pattern. And we could see weakness in here as a retest basically of the resistance. And if price breaks the neckline, breaks the support, then I expect a bearish break as already indicated. And I expect price to challenge the 38.2 fib at 104.60. In this scenario, I'm looking for a 4-hour candle that could poke through and kind of break through it. In fact, not just a small candle, but a decent sized candle with the close near the low. And most of that candle, I don't want a candle that just barely breaks through like this. No, I want a decent sized candle that goes through it like that. Then look for the same recipe, look for a pullback and a continuation from 105.75 roughly down to 104.60. There could be a bit of a bear flag perhaps, and we could see another fall down to the 50, for instance. That could be one scenario as price basically retraces and bounces at these fibs, but it could continue to lower fibs. That's basically the game between momentum and these fibs. Price could stop at these fibs but continue until it maybe hits a fib that we see a bigger bounce. All right, it could be any of these fibs, even down to the 78.6 fib. Now, if I look at the daily one more time, you see a support triangle connecting these two bottoms. At the moment, the 78.6 fib probably and the 61.8 have a bit more confluence. Also, the 38.2 fib, there's a bouncing spot here because of the supply and demand zone that we see here. So these three fibs seem the most likely for a bigger bounce at this moment, but we'll see. Time will tell. For the moment, this is a triangle and looking for a bullish or a bearish break. We're going to keep an eye on this dollar yen and of course the euro dollar pound dollar in our live trading webinars Tuesday, Wednesday, 6:45 a.m. GMT time. We take a look at discretionary analysis and momentum and correction. Nanette takes a look at his recap. On Monday, Wednesday, he takes a look at trading London Open. And Thursday, we together take a look at breakouts and fake out setups with high probability. I look forward and hope that you'll join our webinars. Let's continue with the euro dollar weekly chart. We see a good breakout candle here, weekly breakout candle with a strong close near the low. Not a sizable candle, but I think it could indicate some weakness for this week. We, of course, when zooming into the daily chart, see a bit of a channel as well here. And I have a fib on, as you can see, on the last two daily candles. And I think that any retracement that basically stays below 110.60 is still bearish. Anything that stops at, for instance, the 78.6 fib at around 110.30 or the 61.8 fib at 110.20, 110, round level obviously. Those are all resistance levels as far as I'm concerned for a continuation down to challenge 108. And why 108? Because on a weekly chart, we can see when we zoom out a bit, that this is a big consolidation, and 108 is a big support level. We got a lot of hits here that indicate it, so 108 will be the next target. If we break below 108, well, then we're looking at a stronger bearish breakout, and price could challenge 105, 104.50, the bigger bottoms. For the moment, though, we are seeing a breakout below this trend line, and we're seeing basically price make lower lows and lower highs. The next target is 108. We'll have to see how price responds there before we can think about bigger targets. For the moment, that seems the most likely target. So that's why any retracement up, I think, even if it breaks this channel, I think it's still resistance and could easily turn at any of these fibs basically for downside. Now, if it breaks above the 110.60, that's a different story that we could see basically price maybe make a pattern, a bull flag or triangle, and there could be a challenge of the bigger resistance trend line here up at about 111.50. If it breaks 111.50, then price could challenge 112.50 and challenge the bigger broken trend line before I would expect resistance again. So there is some bullish potential there, but higher here and here. Ultimately, though, all those levels are resistance too. So those could easily see continuations back down again. So this is the scenario at the moment, I would say. Bearish, looking for retracement. If we do get a stronger push up, there could be some bullish potential, but ultimately I think we're going to run into resistance. So the key levels, 110, 111.50, 112.50 in my opinion, targeting 108. And if we zoom into the hourly chart, there could be a bigger, let's see if we get a bigger zigzag. If not, if we don't get the retracement up to the fibs and I'm wrong, then we'll have to see. Price will then probably break through this bottom and there could be some push lower. For me to be interested in the bearish breakout, to be honest, I would like to see price below this channel. I would probably need to see price move down to the target, make a bear flag like this, and then break again. And I would probably be interested in trading this flag or the break of the flag. That's where I would get interested in downside. I think that the first breakout here, I would probably skip, wait for the break of the break before I'm really interested in the euro dollar. Now moving on to the pound USD, we see a triangle at this point. And I'm open to both basically bullish and bearish scenarios. A break of the resistance, and I think there's a pretty good chance for price to get up to the minus 272 target in a bigger kind of zigzag to the upside. Price already respected the 61.8 fib. Target therefore minus 272 at 136.70. But I need to see a good 4-hour or daily candle push above this resistance, and that would be the signal for me for an upside. All right, 4-hour or daily candle there. Now, if I'm wrong and price, we're not wrong, but if the other scenario occurs and price breaks through this support level, would like to see a good 4-hour or daily candle break below it. Then the first target is the 78.6 fib. Then after that, the 88. Then the bottom. And only when the bottom breaks would I expect some bigger downside to occur, and price could then start falling down to the 125. All right, so that's basically what I'm looking for on the pound USD. Last but not least, the Aussie is basically respected the resistance on this weekly chart. You can see that pretty clearly, respecting the resistance trend line. It's got support trend lines too. So at this moment, I think that we could be in a mini bouncing spot. Let's take a look at the 4-hour chart. There we go. And you can see on basically, this 4-hour chart that we're at the support trend line as well. Also, when we look at the Murray Math levels, basically we see that we're at support as well. So from this perspective, maybe a bit of a bounce up to retest that same resistance trend line would seem likely at this point, unless of course we get a clear break below 74.50. Then price is going to probably challenge the next support trend line at around 73. All right, that could be a breakout to the downside, or a bounce back up to retest 76 resistance and maybe get a head and shoulders, whatever. That could be possible, but whatever the reaction here is, there could be a potential up to that level. On the hourly chart, you can see that this is basically a correction going sideways, and we need to break above 75.20 before we can get that bigger upside to 76.50. That would be needed. I would need to see basically some good momentum here, some triangle, and then a break of that momentum to trade it to the upside. And to the downside, I need to break below 74.30 like this, some kind of bear flag, and then I would expect a downside continuation. So this is what I'm looking for. I'm cautious at this point. I want a clear break to the upside, pattern, and then re-break for upside trade. I want a clear break to the downside, pattern, and then second break before I trade it to the downside. Interesting spot, certainly, but I'm looking for more confirmation before I trade the Aussie. All right, that wraps up our video recap today. Please join us, of course, through our website, admiralmarkets.com, to catch all the analytics and webinars. Thanks. Wish you good trading.